morning. My name is Rob Kaplan. I'm the founder and a partner at the law firm of Kaplan, Voekler, Cunningham, and Frank in Richmond, Virginia. Joining me today is Ray Davis, who's Chief Business Development Officer at Red Oak Capital Group. Ray, why don't you tell them a little more about yourself?
Yeah, Ray Davis. Thank you for having me, Rob. I'm the Chief Business Development Officer for Red Oak Capital Group. I run strategy, the capital markets group, and AUM strategy for the team, and I'm happy to be here.
Great to have you. Red Oak has conducted to date 4 Regulation A offerings and have 2 in filing with the SEC currently, and has raised somewhere in the neighborhood of $200 million in the last 30 months. As many people know from internet research, our law firm was very integral in the process of revising Regulation A to becoming a capital raising tool that's effective for Main Street businesses in the U.S. Ray's company has been a longtime client of ours and is one of the more, if not most successful issuers of Regulation A offerings in the U.S. currently. We've seen a large uptick in the amount of people and issuers using Regulation A and expressing interest in how to leverage Regulation A in their businesses. And so we thought it was important, since we have such a valuable case study here, to really sit down with Ray and develop a series of videos that will allow us to illustrate how the Reg A process works and how it is best utilized with the number of capital raising channels and options available to the public currently. It's also a unique time to look at this for many issuers. I think with the volatility that the U.S. capital markets have experienced since late 2019, followed up by COVID-19 and now the elections, the opportunity for alternatives is probably as strong as it has ever been. And so the importance of putting out an informational series like this, which looks at an actual issuer and how they have effectively utilized the market, we feel is an important way to communicate to those interested in the business community how this can be done and how they can explore this further. Ray, do you have any comments you wanted to add from the standpoint of the market or where Regulation A stands now versus where we were several years ago when we started this process?
Well, I'd like to say first, I agree with you. I think there's enormous demand for alternatives within the independent broker-dealer channel and REIT channel right now, with what's going on with the current political environment, the election, et cetera, with COVID. There's a real opportunity. Folks are looking for yield. They're looking to find a way to invest in something that has some safety or some unique attributes depending on their situation. Where Regulation A is now relative to where it was we started a few years ago is scary. It's quasi-public. It's quite a hurdle to do your first Regulation A. But I feel like it's became easier, 1, from experience, and 2, as a working group, Rob, I think that we've dialed down the process that has really driven the cost effectiveness of what we're doing.
And that's an interesting point, Ray, and I'd like to expound upon that just a little bit to sort of give people that are watching this video some context as to what they're going to expect going forward. You know, I think a lot of potential clients that I speak to and business people out there have a view that they should be able to utilize Reg A, put out a clear, concise offering circular, and, be able to raise the money from there. And that really is only the starting point. And I think that's what's so valuable about having you here is, what we do is develop the vehicle for the offering, but guys like yourself know and learn the market and have some very interesting conclusions on how these things are effectively sold. So if in 30 words or less, what would be the theme for this series from your perspective that we're going to be focusing on a lot here?
I would say the cost effectiveness of producing a Reg A that gives you a base to grow with is probably the most critical aspect when bringing a product to the market. And it's really about the team that helps you encompass that. what your firm's done for us, Rob, from a creative perspective is not seen. That I've rarely seen it, and I work with law firms on a daily basis. So I would say the underlying factor is just that, is the base Regulation A, doing it in a cost-effective manner, both from a legal perspective and a marketing perspective, is the base of where you want to start.
Great.
Slightly over 30 words, but
that's all right. You did pretty well. I can't criticize that being a lawyer. I'll use 5 words when one is sufficient. Let's take a moment and just go over the basics of Regulation A. Regulation A is a method of offering securities in the marketplace that is exempt from registration under the Securities Act of 1933. Registration is, when people hear it in the marketplace or in the news, it's typically associated with IPOs or other public offerings on Wall Street. In the United States, the law is that a security offered in interstate commerce must be registered with the Securities and Exchange Commission and meet the Securities and Exchange Commission reporting requirements in order to offer those securities, unless an exemption applies. Most people are familiar with private offerings under Regulation D, which encompasses a broad variety of different transaction types, from private equity and institutional capital to private placement memoranda to friends and family raises. Regulation A is one of those other exemptions that the law provides, except Regulation A is unique. Regulation A is a procedure whereby the securities themselves are exempted from the registration requirements of the Securities Act. The implication of that is pretty critical to understanding the benefits and the disadvantages of the offering type. Because once the security itself has been exempted, that allows general solicitation, meaning you can market the securities however you see fit to the marketplace. You can offer the securities to non-accredited investors, meaning while there are certain limitations on how much non-accredited investors can invest, you can sell these securities to anyone, regardless of their wealth level or their sophistication level. As I said, subject to certain limitations associated with non-accredited investors. The securities can be traded, can be sold in secondary transactions. Currently, secondary markets for these securities are only developing and are pretty thin, but unlike a Regulation D security, which must be held for certain periods of time, Regulation A securities can be freely sold between individuals without any securities law implications to the issuers. So, amongst various other attributes of the offering type. So what we're really dealing with is a securities offering type which has all of the practical attributes of a public security without many of the regulatory expenses and burdens associated with a public security. There are reporting requirements associated with Regulation A, but they are streamlined and much less burdensome than those associated with normal publicly registered securities. There is a limitation on how much you can raise in a 12-month period. Currently, the maximum limitation is $50 million. However, the SEC has proposed increasing that to $75 million in a 12-month period. The biggest success for Regulation A has been in what we call the independent broker-dealer and registered investment advisory space. The easiest way to draw the distinction between an independent broker-dealer and some of the larger groups that you may be aware of, so for instance, a Citigroup or a Goldman Sachs, would be that in the independent broker-dealer space, the registered representatives, the salespeople, the advisory people, are independent contractors of the broker-dealer. So the broker-dealer does not have the ability to dictate what they sell at any given time. Whereas in a proprietary shop, such as a Goldman Sachs or
BlackRock or whomever.
Right. The sales force is really told what to distribute. The priority is market making in the traded markets. So you're dealing with professionals who are looking primarily for alternative investments that are going to meet specific priorities associated with their clients' investment goals, balancing risk with reward, debt versus equity. You get the gist of it. That is probably the most effective arena for selling Regulation A securities right now. And Ray is an expert in this arena. And given that technical description, I'd like to turn it over to Ray to give more of a qualitative description of the independent broker-dealer RIA space and how to approach that to effectively.
We like the independent broker-dealer space. It has its pros and it has its cons. It takes a real strategy to penetrate the independent broker-dealer channel, but once you do, you have a selling group that, in my opinion, far exceeds what you do in a crowdfunding platform or trying to go direct. And what I mean by that is, with each broker-dealer, you get, on average, 100 to 200 reps. And if you can penetrate the broker-dealer itself, you now have 200 representatives potentially selling your product. So the ability to exponentially raise capital and have velocity, to me, is second to none within the independent broker-dealer channel. There are some pitfalls, right? There's a cost to do business in that channel, but if you engineer your product right, you can offset that cost. So to me, I would always suggest the independent broker-dealer channel because of the pure velocity of sales that you can have. And with velocity, you can drive down cost if you've done your structuring correctly.
I want to thank you for taking this time with us. An option in presenting the series was to simply do this in more of a lecture format and put up PowerPoints and go through checklists of what you would need and how the procedure will work. But I think you're going to find this very interesting. We are now in future installments. We're going to reminisce about the road that Red Oak Capital took with our law firm and the strategies that were employed that hopefully will be interesting to you, but provide illustrative lessons that you can readily take and adapt for your own capital strategies. We always stand here at Kaplan Voekler available for questions. Reach out to us. We're happy to make new relationships and help you in this process going forward. And I think this guy is kind enough every once in a while to answer a question or two for people. In fact, we will, as part of this program, have a standing blog resource at this site where anyone can ask questions of myself or Ray and another colleague of ours, Nick Duran at Crescent Securities, who you'll be hearing more about, related to this series or questions in general about Reg A and the sales process. We really look forward to having you on this journey with us, and hopefully you'll get a lot out of it. Thanks very much.
Thank you.